Okay, take a look at this chart. This is active listings in Nashville by Redfin, Zillow, Realtor.com, and then my data that I pulled directly from RealTracs. And what you can see is you see 4 different lines, 4 different amounts. I would consider only one wrong. Could you guess which one that I think is completely wrong? It's fake news, false information. I'm really curious if you can get it. We're going to come back to this and I will give you the answer. It's really interesting, by the way. It's actually shocking and disappointing. Let's keep going. For a 3rd year in a row, rents have been dropping here in Nashville. Now, this is multifamily rents. Zillow suggests that single-family rents have been going up. Of course, that's not all areas. And I got to tell you, this market's getting kind of weird with rent. You can see here, 3rd year in a row, I still haven't seen any defaults. But guys, you got to think about this. If you are owning a multifamily, not only have rents gone down, vacancies have almost doubled, okay? Because there's so much new supply that it's spread across. You have vacancies that have almost doubled. Costs have gone up, your insurance, your property tax, your interest rate, your debt service costs. If they haven't gone up, they're about to, unless you locked in some really long fixed rate, which is pretty rare in the commercial space. And your operating costs, your maintenance, your labor, it's all going up. So it is the absolute nightmare scenario. And we've had very few defaults, at least publicly, very few. I'm very curious about this. If you know something about it, please let me know, because I think it's kind of weird. Now, one thing you got to remember is this is December. And in December, 'tis the season for the lowballs. I was trying to figure out, is there a way to mathematically know how much you can get when you're lowballing in December? And I came up with this chart. Now, this is a pretty wild chart, but let me just explain to you what you're looking at here. If someone cut their price, if you took the percentage from the original list price, could we find out how much more they're willing to give? In other words, how much more did they get in discount after it had already been cut with a price cut? And interestingly enough, the more the price cut from original list price, the more they're actually even willing to give. And what's really interesting, it's not this median price, which does kind of bend up all the way as it goes towards 10%. But look at this. Let's say that the price had dropped 6% from original list price. So think about a $500,000 house is now $470,000. Okay. The median discount after that is 1.6%. So if you plotted them all, you'd get another 1.6%. But it's this upper band. It's the median of the median, or the upper quartile or lower quartile, however you're looking at this. That number is 4.5%. That means the distribution of discounts is much, much wider. There's a lot more opportunity. If you see a house that's dropped 6%, there's a lot more opportunity to get another 5% on top of that, and even more. The distribution's even larger. So if you want to lowball somebody who's been cutting their price and really doesn't know what their house is worth. A lot of times it's overpriced is the reason it hasn't sold, and it's the reason they're cutting prices. However, in November and December, you have 30% less demand, which means there are times where maybe a house is priced fairly if they would give it more time, or they would wait till the spring when there's more demand. But because they're cutting their price in December, trying to drum up demand, you can take advantage of that and essentially arbitrage the seasonality, right? You're getting a discount that you wouldn't get in the spring. Happens every year. And this chart just shows you the further they get from that original list price, the more likely they're to give even more. You can take advantage of it. You have 2 more weeks? Good luck with that, guys. Let's keep going. Active listings in Greater Nashville area for single family houses. You can see they peaked in October. Okay, we're going to come back to this because of my original chart. They peaked in October. They've been tanking ever since. Here we're at 6,800. But guys, a year ago, we were at 5,900, almost 1,000 more listings this year than last year. I got to tell you, I did a double price cut analysis. I don't have it on this sheet, but double price cuts of what houses are cutting their prices again this week. It's a lot of lower priced houses are cutting their price, which, by the way, guys, is a horrible practice. Do not cut your price in December if you're listing your house. It just screams motivated seller. It's please just give me anything. I'll take it. It's the week before Christmas. Why in the world would you cut your price unless you're just begging for a low ball? Just so you know, prices peaked in November. They are tanking now. Contract is tanking. That Trump euphoria has come to a pause at least, and now median contract price is tanking. Now, one interesting thing here, median contract price is much more correlated with where price is going than price cuts per se. But notice this price cuts as a percentage of listings is starting to tick up, right? It's bending down because I have it inverted. But the percentage of listings that have cut their price is actually starting to increase again. That's interesting. That shows that there is pretty significant price pressure, downward price pressure right now on houses, and you can take advantage of that. It is the season for a discount. Now let's take a look at this neighborhood tracker. Someone asked me last week if I could do Bellevue. I added Bellevue in here. Really interesting. We got a seller's market on one side of the river, a buyer's market on the other side of the river. But believe it or not, prices have been moving up in this area pretty well. Let's take a look here. This is right off of Morton Mill here. I actually like this area. A lot tighter inventory. We're gonna talk about this, but this blue line right here is active listings over time. So you can see going back to 2022, look at that. In 2022, there were more under contract than there were active listings. This is like a 1 week supply. Look at that. 7 under contract with only 2 active listings. That was in 2022. Here we are in the December 24. There's only 13 listings and we've still got 6 under contract. That is a tight supply. Now, it did get a little bit soft in September and October, but that has tightened up quite a bit. Notice that prices are not back to where they were in Q2 of 22. So prices still did peak in 22, but they have been very stable and really close to where they were, maybe a few percentage points down below where they were in 2022. Kind of interesting. Transaction volume stabilized. And then my favorite chart here, we've got a scatter plot of every single sale. Now, if you want to see where prices are headed, take off the active and you can see what's under contract. And you can see we've got one above the trend. So there's one that's going to be pushing up the median. We've got a couple, you can't see it, but there's a couple there right at median. And then you've got a couple down here that are below the median. This to me looks like it's fairly stable in terms of prices. So interestingly enough, it does look like leases have been trending up over the last several months. We'll see if that continues. Let's take a look at the other side of the river here in Bellevue. This is River Plantation. I spent a lot of time looking at condos there last year for a buyer. Look at the active listings, 16 with only 4. So this is like the equivalent of a 4-month supply of inventory, what feels like a 4-month supply. Pretty soft. Notice prices have been pretty stable, pretty strong, but not where they were in Q3 of 2022 where they peaked. Nonetheless, let's take a look at the under contract here and you can see we're right in line with median. Let's go to Gallatin here. So Gallatin has very stable with pretty decent price trends. We can see here we do have a 23 active listings, which I'm pretty sure are new builds. Let's scroll down here. We'll see. Look, we're almost back up to where we peaked in Q2. So prices are trending up here. And then when we look at under contract, we can see pretty stable on prices, maybe trending up just a little bit. But let's take a look and see how many of these are new builds. So we're going to take these off. We've got looks like new builds are, look at that trend on new builds. It looks like the new builds are dropping in price where they were tons of them, well over 200. All of these, which they may be townhouses, no, that's site built. All of these, oh yeah, there's a lot of site builds in there too. Wow, so we've got new builds pushing down previous new build prices. That would be interesting. It's kind of what I'm seeing. Builders are a little bit nervous, so this may be an area where builders are nervous. Kind of wild. Okay, so let's go back to the beginning. Which one of these charts is wrong? Well, it's actually super simple. Redfin always overstates their active listings, but they're not wrong, okay? Because when you're looking at a chart like this, you're not looking for an exact number. You're looking to understand where inventory is heading. So even if you have an incorrect number on here, if you're consistent with how you pull it, you can actually still come up with a valuable conclusion or valuable information. So even though Redfin overstates active listings, I cannot figure out how they get this number. I've thought about it. I'm not really sure how they get this number. Maybe they add in all the under contract that's showing. I don't know. But nonetheless, they're not wrong because they capture the trend just like the My Realtrax data and just like Zillow does. The only one that's not doing this is Realtor.com. And here's a view that you can see it. Realtor.com went completely rogue in July, completely rogue. And it's not just active listings that they did this. Take a look at their pending listings here. I posted this on Twitter the other day, but they have more pending listings for Tennessee in November than they did in April. Guys, that's just not how seasonality works. There is not more pending listings today than there was in April and May. That just doesn't happen, even if we're having a bullish year, even if demand is up, which it is. It's up year over year, not from the spring. Look at demand. So demand peaks in May, June timeframe, sometimes in April. But even though we're up year over year down here, our demand is still 30% lower than it was in the spring. In fact, it's 30% lower than it was last year. So even though we're up year over year, we're still much lower than where we were in the spring. The idea that Tennessee pending listings are up from the spring is it's just silly. And it's unfortunate that the St. Louis Fed is using Realtor.com data. It's unfortunate that Realtor.com data is publishing this. And just so you know, I appreciate Zillow and Redfin and Realtor.com and their effort to educate buyers and to provide data freely and insights freely. But when you do this and then people reach out to you and say, hey, I think this is wrong, and you still ignore it, it's really unacceptable and it's really deceptive. And so I would encourage all of y'all to be very careful about using Realtor.com data because it's garbage right now. It's garbage. Unfortunately, I loved it. I created all kinds of data visualizations around it, and then it turned into trash because they're just, quite frankly, they've lost their credibility. Redfin, they're my favorite. They got this Tableau thing. This is great if you don't have localized data like what I have with my neighborhood tracker. If you don't have something like this, Redfin's fantastic. And it's really fantastic to get general ideas. But again, look at this. There's buyers and sellers markets right across the street from each other. You look at zip codes, there are trailers and mansions in zip codes that are the same. You can't, not in Tennessee, not in Nashville, can you really use zip code data, and even county data can give you insights, but it's not going to give you that localized data where you can see buyers and sellers markets right beside each other in different price bands. So with that, I hope you guys have a great rest of your day, and I look forward to seeing you next Saturday. Thanks a lot.